All right, let's shift to some home, some things happening on the home front. Oh, these were good. Wall Street Journal is getting hot with a couple articles about investing. What's happening in the stock market, despite what happened this past week. And while we're on the topic of hedge funds, let's give hedge funds more of our money. That's what these people are saying. So this first article is about more people are investing in the stock market than ever. More working class people are investing in the stock market. Always a good sign when people who have working class jobs are passing around stock tips. So if you've been following for the last couple of years, platforms like Robinhood, Webull, and Webull they introduced no commission trading. And that's what, if you were paying attention to some of the GameStop investment mania from a couple years ago, the way that a company like Robinhood makes money, at least off of their trading platform, is that for you get to trade without any fees. There used to be fees, now there aren't. And what they do is they front run your trades. They send the order flow to institutional investors like Citadel, like these big operations, so that basically you don't ever stand a chance. As a retail investor, you cannot trade without these high frequency traders, these very sophisticated hedge funds, seeing what you're doing. And they pay Robinhood for that flow. So they pay for that data. And this is this theme of anything that's free is actually a data collection psyop. TikTok is a data collection psyop. Sora 2, data collection. ChatGPT, Anthropic, all of these things are free or nearly free because they're extracting a lot more value from you than you're getting from them. You're a data collection mechanism to them. This is no different. So the stock market is seeing a lot of majority low owners. For the first time, majority of low owners have an investment account. God forbid. Gene Cao spends 6 days a week working at a Chinese restaurant near Tampa, Florida, dunking crab rangoons and chicken wings into the fryer. But in his mornings, nights, and lunch breaks are spent managing his 6-figure stock portfolio. This guy is fucking cooking in the minute, not just crab rangoon. In the beginning, I lost some money, said Cao, who started trading penny stocks on his phone as a teenager and dabbled in options. It's a learning experience. Now the 25-year-old is hooked. Good sign. Cao reads financial news first things in the morning. He's mainlining it. After waking up in the morning, monitors his phone for stock alerts. While at work, and checks the Asian markets once he gets home. He loves sifting through corporate balance sheets and watching the research into a particular company into a company pay off, he said. His full-time job pays about $40,000 a year, but he placed a well-timed bet on Chinese e-commerce giant Alibaba. Can't escape these Chinese tech giants, and kept investing during a lucky streak of back-to-back blockbuster years for the equities market. That is what people say. People say that the stock market is about luck, right? That's why you give your money to the luckiest hedge funds, like the ones that are lucky enough to be connected to Javier Milei in Argentina. Cao is part of a growing group of lower earning investors who are flooding into financial markets at rates never seen before, the sign of a very healthy market. For decades, Americans with low to moderate incomes largely sat on the sidelines as high earners multiplied their wealth in a series of bull markets dating back to 1982. They've jumped in and now account for a higher percentage of investors with retail brokerage accounts than ever before. Among Americans with incomes between $30,000 and $80,000, 54% have now taxable investment accounts. Half of those investors have entered into the market in the last 5 years. 2,700 adults by nonprofit Commonwealth and the BlackRock Foundation. They're part of a new wave of individual investors empowered by commission-free trading, stock tips on social media, and investing apps. There's a lot of stock tips on social media. These people are eating it up. That trading makes it easy for a few taps on the phone and they are a growing influence in the markets. Individual investors rush to take advantage of low prices fueled by stocks recovering from the April tariff tumble. The increase in individual investors propelled the rise of brokerages like Robinhood Markets and Webull that make it easy to trade and have in turn drawn up more people into the markets. Remember, Robinhood needs more people to trade. It needs your grandma to trade. It needs your Uber driver to trade. It needs your average Chipotle worker trading. I don't know if they have any Argentine debt for sale, but they should. Some investors dove into more complicated vehicles, long considered the domain of professionals, like futures contracts and short-term options. Among newer investors, 45% have put $5,000 or more into the accounts, and nearly 40% of investors new to the market since January 2020 plan to hold their investments for at least a decade. Homeownership, one traditional method by which prior generations of Americans built their wealth, have moved further out of reach, just as trading stocks have become easier and cheaper than ever. It's interesting to see more low and more moderate income households participating in the stock market. Oh, that is interesting. More people who don't know what the fuck they're doing are getting involved in the stock market. Interesting. Sound familiar? There aren't that many pathways to building wealth, but the people who started investing in the last 10 years have experienced a period of unusually high returns and only relatively short periods of decline. This is where the risk really comes in. Since the beginning of 2020, the S&P has risen nearly 130%, including reinvested dividends, according to FactSet. The annualized return is more than 15%, and many companies are trading at historically high valuations relative to their earnings. That is what is called froth in the market. That means new investors bought in at higher prices and are more likely to face losses if the market takes a turn. Something Jamie Dimon was talking about this week. JD, the real JD, not the fake JD. Real JD from JP Morgan was talking about the current bubble, and to no one's surprise, there's a lot of retail investors who are probably going to get stuck holding the fucking bag. When asset prices go up, more people are being taken along for a ride, but asset prices can go down too. So there are these stories of people who are contributing parts of their regular income into stocks. They hold regular jobs, but they're getting in the market. The post-pandemic bull market has also minted millionaires. Davis Cheney, 30, was one of the millions of investors who flooded into the markets during the pandemic, many who found themselves stuck at home and flush with cash. I was playing computer games and someone mentioned they made $20 on a stock. He opened a brokerage account, started dabbling in trading equities and options. It's kind of like a game. If you love a game, you're going to want to keep playing. Yeah, famously treating the market like a game is no one's going to get hurt. So I think, I'm a retail investor. Like, I invest in stocks, mostly index funds. And I think what articles like this make me think about is 2008, the Great Recession, and the idea that the way to build wealth is through home ownership. Get yourself a house. It will always increase in value. It never, ever, ever goes down. In the history of markets, housing prices have never gone down. That's what people used to say. And then 2008 hit, everyone gets wiped out, foreclosure crisis, hedge funds and private equity firms end up buying a lot of this real estate for pennies on the dollar. AIG, the banks, they all get bailouts. The individuals don't get bailouts. They get demonized. That's what the entire Tea Party and the whole, I'm not going to pay for my neighbor's second bathroom or whatever. That's where they get demonized as irresponsible lenders, as people, irresponsible borrowers, but all the institutions get bailed out. So now look at this. Working class American, more than ever, your guy making crab rangoon is investing in the stock market. Your barber's investing in the stock market. You're investing in the stock market. When there's a pullback, there was one on Friday, how many people are sophisticated enough not to pull out and take the loss? People say the same thing about the stock market. The stock market always goes up. It's the greatest engine of wealth creation in the world. People like Warren Buffett say that. But Warren Buffett also says time in the market also beats timing the market. Unless you're extremely well capitalized and have an army of analysts at your disposal, picking individual stocks and trying to time the market is not going to be the game unless everything is going up, which for the last couple of years it has. We've been in a massive bull market. How do people react when it turns? Are the options traders just buying puts? Are people sophisticated enough to do that? I don't know. I'm not an options trader because I don't want to get fucking cleaned out for my money. But I know people who are. And I'm not saying that in and of itself, people who are investing in the stock market is a bad thing. I think it is true that you can make a lot of money, but I also think that we are the last people to hear anything. I didn't get a stock tip about the Argentine economy. The people at these hedge funds are the ones who, behind the scenes, who trade off of NPI, non-public information. Those are the people that make the most money. By the time that you hear about a stock, by the time that you hear a tip, unless you're closely watching options flows, it's too late. The money's already been made. So I don't have a problem with people investing in the stock market. I think people should be looking at ways to grow their wealth and not just having sit in a checking account, making no interest, or some bullshit money market account where you're getting punished if they start cutting interest rates. But I also think that we are entering a different dynamic where more people are putting more of their money into the stock market, and the valuations are increasingly detached from the company's worth. Look no further than what's going on in the AI bubble. I work in tech. I run a software company that builds AI software. The amount of money that's pouring into this industry is insane, and the amount of circular investment has been going on. People have been talking about it all week. The amount of circular investment that's happening is really concerning. It's really concerning how these AI companies are all investing in each other, and this is all in part of the stock market.